I'm Nicholas Penrake, and you're listening to A Trader's Life, the podcast where I get to talk to successful traders about their approach to trading, how they started out and went from broke or breaking even to pulling in thousands of dollars a week. Trading is a tough game. They say only around 5% of those who try actually make a profit. Join me for A Trader's Life to glean some valuable insights from the market wizards I get to talk to. Midway through 2021, I was looking for a means of making some passive income that involved no trading risk. And I came across a company operating in the crypto space that specializes in masternoding. This company, called Yield Nodes, generates returns by verifying new blocks of transactions in cryptocurrencies. What they've done is to allow the public to participate in their platform by way of placing a stake in the business. This being the crypto space, I was intrigued but naturally somewhat cautious about getting involved. I reached out to the CEO, Steve Horman, and invited him onto the show. I found him very transparent and helpful. Episode 40 if you fancy a listen. So the first thing to note, this company has been very favorably reviewed by independent experts. The second thing to note is that you can make a very good return, around 10% per month on whatever stake you put in. When you factor in compounding, you're looking at something more like 220% per annum. So if you want better returns for your savings than your local bank gives you, and a means of generating steady passive income that doesn't involve trading for a change, I say this is a very good platform to try out. My daughter, a film editor and highly skeptical of anything crypto related, got started with 500 euros, just to give it a go. She's been averaging 50 euros a month since that time. Now, neither she nor I are financial advisors, so obviously do your own due diligence before getting involved. Suffice to say, it doesn't take long to make back your initial stake at returns like these. If you want to participate in the Yield Nodes offering, do please consider helping this podcast by signing up through my link in the show notes. It'll be yieldnodes.com/atraderslife. Instead of the usual minimum deposit of 500 euros, you can make a start with as little as 50 euros. That helps you, and it helps me pay my hosting fees each month. Okay, that was Yield Nodes. Now on with the show. My guest today is Jeff Wecker, a personal coach and a top 10 Forex trader worldwide. He's a former member of the Chicago Board of Trade and now CEO of the Forex Global Trading Group, the world's largest provider of Forex services, including unlimited funding programs and world-class education in courses ranging from algorithmic trading to advanced options and everything in between. These are all impressive credentials, of course, but what I so enjoyed about our conversation was Jeff's sheer honesty and dry wit. This is quite a slice from a veteran trader's life. Jeff Wecker. Hey, Jeff, how's it going?
Very good. How are you today, Nick?
Yeah, welcome to the show. Thanks for being here.
Thank you. Pleasure.
So you've been trading for years and years. How did you get into trading in the first place?
Well, I've always been in my own business. I've had a few businesses, and I started to think about what I was going to do when I retired from these businesses. In other words, what was my second life going to be? And I always had kind of an interest in stocks, and I started following them and started charting them manually in those days. Okay, we didn't have PCs. So I actually drew my charts on graph paper and made the bars every day and started to follow it. And then it occurred to me that, trading might be the answer for me when I retired from my business, that I enjoyed it. It was very challenging. It was something you could do till you're 100. Okay.
Yeah. Okay. So when did you retire?
Well, I've not retired, but I sold my business so that I was able to devote full time to trading.
Yeah, yeah. So that was quite early in life, I mean, or maybe midway, if you like, 40s, 50s, something was it?
Yeah, the so what I did while I still had my businesses, which were only a few blocks from the Chicago Board of Trade, I went down to the Chicago Board of Trade and I bought a seat. And
Okay.
I started to trade in the 30-year bond pit. Those were
Yeah.
the days, quite different from today, where you trade in front of your PC with a latte in front of you. Uh, but these pits had 300 people in them, and you were constantly getting stabbed with pencils and pushed down stairs and trying to write your trades on little 3x5 cards, and then trying to make sure that the other person accepted the trade. And it was quite different from today. Uh,
Yeah, for
it
sure.
was it was a
Yeah.
physical battle as well as a mental battle.
Yeah. How
But
did
that's
you
where I
adjust?
learned. It was a great place to learn. You had to learn fast, or they showed you the door. Um,
Yeah.
these were some of the best traders in the world. I remember a guy named Tom Baldwin in the 30-year bond pit. The guy could actually, according to the Wall Street Journal, and I saw it as well, he could actually move the bonds by himself, the 30-year bonds. He traded 20 to 30,000 contracts a day in those days. And I stood only a few feet away from him in the pit so I could watch. But I mean, could you imagine one guy could actually move the 30-year bond
Yeah.
prices?
What do you think his secret was?
The I never talked to him about that, but he just had a knack for it. Okay,
Mm.
he, I would call him a natural because he,
Yeah.
didn't, as far as I know, did not have a mentor. Okay, and learn from a few courses, but he's one of those rare. What would you call them in sports? A natural.
Yeah. Just great intuition, I guess.
Right, right.
Yeah, yeah,
He was
yeah.
probably a great dancer.
Oh,
I,
really?
I know a lot of guys traded over the years when they look to hire traders, they look to hire people who are good dancers, who have
Ah,
rhythm.
okay. Yeah, right. Well, that kinda makes sense in a way.
Yeah,
Sounds
so maybe
sounds
he was
yeah.
good at getting into the rhythm of the market. Um,
Yeah, yeah, that's very intuitive, isn't it? Almost like the music of the charts, as it were.
right, and of course, when you're trading 30,000 contracts a day, you can intimidate people.
Yeah. How did you manage the transition from, the more physical world to the online world?
The well, it really wasn't that hard because I had such a good background in the pits of the Chicago Board of Trade. I really learned how markets worked. Okay, you just learn things there you couldn't learn anywhere else. For a simple thing like the markets always move towards where the stops are. Okay, that's
Yeah,
that's you wouldn't have learned that anywhere else. And of course, I learned how to take losses quickly. Um, and how to trade my profits to the general idea of being when stops were hit, I would be, let's say on the downside, stops got hit, I would be buying, and as it reversed and turned up, I would start to feed out the ones that I had bought,
yeah,
and then wait till they started to hit stops on the other side, and then go the other way. So really got to learn how the market went after the stops and how you could get in once those stops were hit.
yeah. And we're talking
And
mainly Forex, right?
well, at that time it was the 30-year bond pit,
Okay, just, this you're referring to the bonds. Okay, yeah. Got you.
but certainly that's true in forex and has a lot. I kind of trade the same way, so that's why the transition from the pits to online trading was not really difficult for me because I understood how markets work. And so I was able to adapt very quickly. And I started trading just about everything that moved online, S&Ps and Forex, even cattle and corn. And, today I'm even trading, Bitcoin and all the commodities. So, like I say, I'm trading just about everything that moves on the planet.
Yeah.
And
Okay.
the good news is, I've been in the business so long that I've been able to trade through bull markets and bear markets and sideways markets. So I've been able to adapt my trading uh, to those various kinds of markets. And you have to do it because they're very different. Okay.
Yeah.
Trading volatility is one thing, and trading a sideways market is quite another thing.
Yeah. Sure. Yeah. 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 So when you started, did you put in quite a lot of your own money to get started, or were you just very cautious? What was your approach?
Well, both. I mean, I was fortunate for my businesses that I had plenty of capital. That was never an issue. But I learned very quickly that, in my mind, the two most important things in trading, one is where and when do you get into the market, and two, how do you control risk?
Yeah.
And I had a lot of hard learned lessons at the Chicago Board of Trade and the bond Ted. I remember in '87 when we had the stock market crash, the Dow dropped 500 points on a Monday, which was a lot. That would be equivalent to 10 or 15,000 points today. I happened to unfortunately, be short bonds at the time, and in a flash, I was minus $250,000.
Is that
The
your own money? Your own money?
Yeah, that was a lot of money at the time.
Yeah. Obviously. Yeah. Yeah. Christ.
uh,
Yeah.
the so I had that experience, and it's kind of interesting. In those days, if I lost 5 or 10 grand or whatever, I might kick a chair or get upset. But when you're down 250,000, you kind of get numb.
Yeah. For sure. Yeah. Well,
You
gosh.
decided to sit there looking at the screen, which luckily is what I did, because later in the day it calmed down, and I only ended up losing 87,000. That's a
Yeah.
lot of money, but actually it turned out to be a good trade doing nothing. It was the best 87,000 I ever lost.
Yeah. It's one way of looking at it. You clearly have a sort of optimistic outlook, which is probably absolutely what it's so essential, isn't it? And it probably help keep you going, because any trader, no matter how good he is or she is going to have those really horrible periods of drawdown and just a sort of bad run. I'm sure you've been through others since then.
Yeah, actually, I'm having one right now.
Oh gosh! All right,
I've been
tell us about
I've
it.
been I've been short the dollar, U.S. dollar, for quite a while against
Yeah,
the Australian dollar and British pound,
yeah, it's bounced
and
up, hasn't it? Quite surprisingly.
yeah,
Yeah,
we've had some big moves against the dollar. I think we're up about 800 pips with the Australian dollar, and the equivalent amount with the New Zealand dollar. And the pound has really been very strong. But something happened the other day. I think we've had a rise in U.S. interest rates, and they've been buying the dollar. So we're giving back some profits here, which is not exciting, but that's
yeah,
part
yeah,
of the game.
yeah,
I'm
yeah,
still bearish on the U.S. dollar long term, but uh, you can go through a lot of pain, waiting for that. So
yeah. You can, yeah,
yeah,
definitely.
luckily we've been up 800 to 1,000 pips in each currency coming into the last few days. Those
Yeah,
who got um, short the dollar the last few days, they're in a lot of pain. I mean,
yeah,
we're not happy, but at least we're dealing with profits, reduced profits instead of losses. So they make it
yeah,
very tough. Dollar is very strong right now. A lot of people who are on the wrong side are feeling pain, and what will probably happen, as usual, they'll eventually hit all the stops. People who are short the dollar,
yeah,
and when all those stops are gone, then we'll reverse and start getting back to the trend. But that's like I said to you earlier. I learned in the pits 30-year bond is that the markets always trade towards the stops. And we're seeing that right now, that people who are short dollars are really getting hurt and getting stopped out. And we're not going to reverse till they're all gone.
Yeah.
So
Yeah.
what happens is, which is why I said to you earlier, you said, what are the most important things? And I said, well, 85% of the game is knowing where and when to get in.
Yeah.
If you got into short dollar positions 2 months ago, like we did, you're doing great. If you got short the dollar 2 days ago, you're getting hammered. Okay.
Yeah. Yeah. Yeah.
So it's 85% of where and when do you get in.
Mm.
The other 15%, of course, being money management and trade management as well.
Do you take a position? You said the dollar is essentially on a bearish trend. Do you take a position and hold it for all those ups and downs as it's going down on its trend, or will you buy and sell according to the dips that you encounter?
Well, no, I'm very technical. Okay, I'm a price action trader. I really kind of ignore the news, um, even ignore the fundamentals, especially ignore the news, because anything you read in the paper, whoever wrote it had some kind of agenda. And, that agenda may be to get you going the wrong way. Okay.
Yeah.
Uh,
Yeah.
so I trade strictly price action. Let me give you a very simple example. All of the pairs against the dollar, Australian dollar, British pound, New Zealand dollar, US Canadian, they all have a very similar pattern on the weekly charts. And they're all kind of giant head and shoulders that project several thousand pips against the dollar. Now, head and shoulders is really trade in 101. It's one of the first things you learn.
Yeah.
And on a head and shoulders, there's something called a neckline, which connects the two shoulders. So when it goes through this neckline, that's where I would buy it at a very specific price,
Okay.
because that neckline only has one price, and that's where I buy it. If it goes back below that neckline, I'm out. As
Yeah.
long as it stays above it, I'm going to stay long if it's a buy. If I was short, if the head and shoulders was the other way and it projected downward, I would sell it below the neckline, but get out immediately above the neckline. So
Okay.
I'm a technical and price action trader. I don't really think too much about it. I'm more like Nike's motto: "See it, do it."
Yeah.
So if I
Yeah.
see something going through a neckline on head and shoulders, I'm going with it as long as it continues through that neckline. If it goes back below the neckline, I'm gone. It's very simple.
Yeah. Yeah. Do you use other things like indicators, Bollinger Bands, any other kind of indicator?
Well, yeah, I have. We've built an algorithm called Trade Detector. And we have a lot of users around the world, and this incorporates incorporates all the different indicators that I use. Um, as I said, I'm very into patterns for major trades, like I was just describing, head and shoulders patterns, triangles, rectangles, things of that nature. And the reason I am is that all of these patterns have lines, and on that line, whether it's a triangle or whatever it is, on the line there's only one price. So you know very quickly whether you want to be long or short, depending which side of the line it's on. So
Makes
I
sense.
risk very few pips. I get into major trades with maybe 5 to 15 pips of risk, because I'm basically trading off a line that only has one price on it. You see what
Okay.
I mean?
Interesting. Yeah. Yeah. Okay. And are you trading weekly? You mentioned weekly charts. Is that your sort of first point of reference?
The weekly chart is my main source to find the big trend. I use indicators to, get me in and out of shorter term trades. Okay, even though I have a long term trade of the pound against the dollar, I will still trade it during the day. Okay, I have an algorithm that looks at things like overbought, oversold. It looks at divergences, okay? It looks at volume, it looks at momentum, and gives me signals that of when a reversal is about to occur. And I'll trade that reversal because reversals are, very valuable in trading. It's what kills a lot of people. But if you understand reversals and know when to trade them, it can be very profitable very quickly. Um, the reversal is probably the biggest killer of most traders. Okay, especially retail. Uh, they may be very correct that the pound is going to gain on the dollar, but if they bought it 2 days ago, we're in this violent reversal now. They're just getting killed.
Yeah.
So, like I said, you have to be aware of reversals. You need some kind of indicator to tell you, when the reversal is coming. And other than that, like I said, the main thing is when and where do you get in.
How does your software, your algorithm, detect a possible reversal? How does it signal that to you?
Well, the algorithm that we've built has channels on it, okay, which are show you support and resistance,
Yeah.
and it also gives you signals when it hits a really overbought or oversold condition or loss of momentum, okay,
Yeah.
or some kind of divergence where price is going one way, but momentum is going the other way, okay.
Yeah.
So the algorithm I use called Trade Detector, it measures all of these things and gives me a signal when the reversal is coming.
Okay. Yeah. With forex, you sounds like you're doing a kind of mix of trades. So you'll do some that are much more long term. You're looking for perhaps a week, 2 weeks, even longer. And then during the day, you're making use of, well, you find the direction. Well, you already know what the direction is, so you're just looking at the day, 4 hour charts in order to almost scalp, really, to
Right. I
kind of,
actually
yeah,
go down to 5 minute charts, okay, for
yeah,
day trading.
yeah,
But I use the same algorithm, our trade detector algorithm. It works on the 5 minute chart as well as the weekly. So I can use it to day trade, which I do, and it spots these overbought and oversold conditions. Uh, if you ever watch day trade, and it's a lot of back and forth, right?
yeah,
And what you have is they do some buying, and it quickly in 5, 10, 15 minutes it gets overbought, and those traders take profits, and now you go the other way. So
yeah.
I'm able to take advantage of that with a 5 minute chart.
And do you think you'd still be just as good, pretty much, without your algorithmic piece of software? I mean,
No,
no. Yeah, yeah. Fair answer. Yeah. Okay.
because you
Yeah,
you really have to know when something becomes overbought or
yeah,
something becomes oversold, or especially if there's a divergence. In other words, if price is going up, but momentum is not,
yeah.
that's a warning. You need to know that. Okay.
Yeah, yeah. And the problem, of course, with most indicators is the time lag, isn't it? I mean, with the MACD and what have you, there's
Yeah.
the
Well,
time lag.
you
So
have to have the right indicators. I mean,
yeah,
uh, I've been doing this 25 years, and how did I learn? Well, I did 10,000 things till I found out which 10 worked. There's no easy way. At least it was not easy for me. I literally tried 10,000 things, pretty close,
yeah,
different combinations over a 25-year period.
right.
And eventually I figured it out.
So are you adept at writing code, or did you just work with a coder to achieve this?
Oh, no, I have, well, I'm the CEO of Global FX Trading Group,
Yeah,
and we have a whole development team, that writes the software for us. I mean,
cool.
it,
Yeah.
it uses my techniques and my system, but I don't write the code. We have developers for that.
How long did it take you to come up? I guess you've been refining it along the way, but how long did it take to come up with the first iteration?
Well, but when trading evolved, when I traded in the pits at the Board of Trade, of course, nothing like that existed, right? So there were no PCs at the time. So the I only started to look at these algorithms once PCs became available, and even then, it took me a good 5 years to get it to where it is now.
Yeah. And I guess you have to keep refining it and tweaking it and so on because the markets themselves change, don't they? And the conditions, the politics, etc.
Absolutely. That's why I rarely backtest anything. Okay, I would when we come up with a new indicator, I'll start running it in the demo account today. Why do I care really how it would have done 2 years ago when the market was totally different?
Yeah, yeah.
You have new players coming in with new ideas, big hedge funds doing new high tech things. Okay, like the black boxes came along, and you have to adapt to that stuff. So I don't really care how an indicator did 2 years ago. I want to know how it's doing today. So as soon as I get a new one, we go right into a demo account and run it in the demo account till we like what we see.
Yeah. What would
So
you look
always
for? Like
go with testing.
80%, 90% success rate, something like that.
No, nowhere near that.
Okay, let's
But
push.
for me, it's about risk reward. Okay, my risk
Yeah,
reward could be 5 to 1 up to 20 to 1. All right,
right. Yeah,
so I don't need to be right 80, 90%, and I'm not. I would say I'm probably only right 40, 50% of the time. But my rewards are 5 to 20 times greater than my risks. So
yeah. So it's
that's
high.
how it works out for me.
Yeah. Makes sense.
Like I remember I was saying earlier that a lot of I'm strictly a price action trader and rarely risk more than 5 to 15 pips to get into even a longer term trade. So I can take a lot of losses as long as when I do catch the winners, they're 3, 4, 500 pips.
Yeah,
So you can take a lot of 10 pip losses, right?
yeah,
I
sure.
don't have to be right 80% of the time. Like I said, I'm probably only right 40, 50% of the time, but that's plenty.
Guys, just a brief reminder here. When you sign up to Yield Nodes through my link, instead of the usual minimum deposit of €500, you can make a start with just €50. Type in yieldnodes.com/a trader's life, or you can find the link in the show notes. Just take a look. If you're excited by the innovations in fintech, I think you'll be seriously impressed. Would you say your sort of business life equipped you well for trading? Do you feel that experience of working in that environment also helps you with the trading? I mean, figures, numbers, percentages, odds, risk.
Um, no, I don't. I don't think so. Anybody can learn trading. Okay, I can teach anyone, and I do teach. I have students around the world, probably in 15 different countries now, and I can teach anybody how to do it. But the hard part is the emotion for them.
Yeah,
The emotions of watching things if they're losing, the problems of watching the money, and so knowing numbers or being mathematical is not that important, unless of course you're talking about options trading, where the math is very important. But there aren't that many options traders. But in trading forex, for example, or gold or silver, to me, if I can get my students over the emotional problems that they have, like all the crazy things traders do, like moving stops, for example, okay,
right. Yeah,
uh, and saying, "Oh, it'll come back," right?
yeah,
Or it's only temporary. If you can help them get rid of all those excuses and all those emotional problems and be more of a just see it, do it person, okay, and don't move your stops, and avoid those silly things. I could teach anybody to trade, but that's the problem, is the emotional stuff. I remember Richard Dennis. He was a great trader at the Chicago Board of Trade, trading grains, and he said I could publish in the Wall Street Journal the rules for trading for how I made $1 zillion, but nobody will follow him. They'll find reasons not to. Okay.
yeah, yeah, yeah,
They'll find reasons to move their stops, or they'll find reasons why, oh, So I'm losing a lot. It'll come back. Okay. And
Yeah.
that's why 80% of them, or 70, 80%, they go bust, they blow out.
How do you think you managed to achieve that kind of discipline that says, right, that's my stop. I'm gonna stick to it each time, even when it's hurting. You go 5, 6 trades in a row that knock out your stop. How do you manage to preserve that discipline?
Well, because I understand now, okay, uh, that I'm playing a risk reward game, and I can have 10 losses in a row as long as I only lose 10 pips each time, and then make 500 when I finally catch it. But, I went through the school of hard knocks to get to that emotional level. I had like I told you about the day in the bonds when I was down 250,000 during the stock market crash in '87. You got to feel that stuff and then you understand, and you learn to be scared. Okay,
Yeah,
but
yeah,
but you also learn to see it, do it, type thing. You know that you
yeah,
don't. The important thing in trading is once you have a system, don't think. Thinking is the worst. Don't listen to rumor. Don't listen to the news or listen to other people. If your system, which you've tested, if it gives you a signal, you see it, you do it, you don't think about it. It's only the thinking that gets you into trouble. If you stick with your system, and there are many systems that work, uh, and you understand it, then you're going to be okay because you're not going to let your risk get out of control.
Did you construct a strategy from almost like trial and error? You just constantly observed what worked and what didn't work, and out of that sort of battlefield, you formed a strategy that consistently paid off.
That's exactly how I did it, trial and error.
Yeah,
Uh,
yeah,
I tried hundreds of indicators. I tried them in combination with each other. Um, I looked at long-term trades and swing trades and short-term trades, and I kept trying things. And for the most part, they didn't work. But over time, I eventually put it together, put the right indicators together, and learned that just have to see it and do it and not think about it. Okay.
yeah.
I think can't emphasize that enough. That people who think uh, about the trades and uh, they get in the most trouble, as opposed to people who just follow their system, whatever it is. Okay, you only get in trouble when you move things. If you have a stop and you're risking 10 pips, fine, you lose 10 pips. But if you say, okay, it's going to come back, and now you're down 50, well, that's the beginning of the end right there.
So is 10 to 15 pips your sort of absolute rule, as it were?
Yeah, I almost never risk any more than that. I have no need to because, like I said, I'm a price action trader. And if something goes through a pattern, through a line, like a triangle, rectangle, head and shoulders, I know to the pip when I'm right and when I'm wrong,
Yeah,
right? If something comes out of a triangle and goes one pip above the triangle, I want to be long. If it now drops 4 pips below the triangle, I'm out. So as long as I see it and do it and don't think about it, I'm not going to get hurt.
and what's your favorite instrument to trade? I mean, is it stocks,
Oh,
forex?
Forex.
Yeah,
I I spend 90% of my time trading Forex, and we have these trades that look like it's going to be bad for the dollar for the next 5 to 10 years. Um,
yeah. Let's
so
let's yeah, let's get back to that. I mean, you mentioned a slight hike in interest rate. I was unaware of that. In fact, what did it go up to? But like a quarter or something?
well, the 30-year bond rate had been about 1.5%.
Yeah.
Uh, it's now in the last week or two, it's gone over 2%.
Okay. Yeah.
So that's pretty good move, and I think indicating to the market that inflation is probably coming with the Biden administration just going to print dollars like crazy to bail out the bankrupt states and cities like New York, Chicago, Los Angeles, San Francisco. They're all bankrupt. and they're going to print money. They're doing this multi-trillion-dollar stimulus plan, and at the same time, they're cutting back on, in their climate change program, cutting back on oil and gas production,
Yeah.
which is driving up gas prices. Gas prices here in Chicago are up 30% this week.
Yeah.
I was paying, I think, under $2 a gallon a couple of weeks ago. It's now $2.60 a gallon. It's up 30% in 1 week. So, with their cutting back in fossil fuels, I think it's going to be $70 to fill up your tank soon. So the market sees all this inflation coming from the printing of dollars, and they're going to be demanding higher interest rates going out.
Yeah.
And the fact that they're already demanding them for 20 and 30-year bonds shows that's what they're expecting. And that's what's given the dollar some strength here the last few days, that you can get a better interest rate in bonds.
Yeah.
I've been talking, my wife has a 401k, like a lot of people, and she was long stocks and bonds and cash. And now a couple of weeks ago, moved her into 50% stocks and 50% cash, totally out of bonds.
Yeah.
Because the bonds are going to lose value as these interest rates go up. So we made a good decision for her 401k, and I would recommend that for for other people who have 401ks or IRAs or whatever kind of account you have, to don't have too many bonds in there. Put your money into. You can stay in stocks for a while because they're still going up. They've not turned around yet. Put the rest of your money in cash or money market, because first of all, you'll lose if you keep the bonds, and secondly, if you're in the money market or cash, you're going to get paid a higher interest rate as these rates go higher.
Yeah. And any feelings about the outcome? Well, not the outcome so much as the foreseeable future with stocks. There's a lot of talk about a bubble. How big can it get before it pops? Any thoughts?
Well, nobody knows that, Nick. What I'm telling
Yeah.
clients is, do not fight the tape.
Yeah.
The Dow's been going up. I mean, when Trump got elected, it was 17,000. It's now, what did it go to? Over 30,000. But it's still going up. It's almost, if you look at the chart, it's almost parabolic. So,
Yeah.
is the top going to come at some point? Maybe. Should you sell it now? No. I mean, don't fight the tape. Every day it's up. Wait till it shows you some signs that it's turning around. And so far it hasn't. So, but if interest rates keep climbing, it's going to be a problem for the stock market, okay? Because the reason they were in stocks is they could earn a safe 2% on stocks while they were going up, and the bonds were less than 1%. So it was kind of a no-brainer, buy stocks. But if interest rates go higher, when I was at the Board of Trade in the 80s, interest rates got up to 17%
Oh,
on the
wow.
30-year bond. Could you imagine that?
Yeah. Crazy.
Now, if that happens again, that's not good news for the stock market, because why would you buy a stock when you can get even, say, 10 or 15% on a no-risk money market?
Yeah. Yeah.
So my answer to you on stocks is, wait and see. Don't fight the tape. There'll be plenty of warning when it starts to turn around the other way. And also watch the interest rates, because the higher the rates go, the worse news it is for stocks. But
Yeah.
do
Do,
not
do,
fight the tape.
do you think the interest rates will go up before the end of the year?
It's always hard to put a time on things,
Hmm.
which is why I trade price. Price moves before the news, right? Crude oil rates are going up, gasoline prices going up. How fast they go, I don't think anybody would know the answer to that, but just know the trend that interest rates are headed up, and inflation is headed up, and gasoline is headed up, and that's where we're going. How fast it's going to be, I don't think anybody knows.
You mentioned the do a bit of crypto as well. What do you do there?
Crypto, I'm really not trading it. It's only been good for a lot of people. It's went from 3,000 to 20,000, back to 3,000, up to 20, back to 3,000, now up to 48,000.
Yeah.
So there's been tremendous gains and losses in that period. For me right now, it's kind of a crapshoot. Reminds me of the tulip mania in Holland.
Okay. Yeah.
Many, many years back, where the last guy who bought a tulip, he exchanged a black tulip for his house. That's how crazy it got. And of
Yeah.
course, that was the end. So, is that going to happen in Bitcoin? I really can't tell you, but it's kind of a parabolic rise, and it's very dangerous to say the least. I mean, it can drop $10,000 in one day.
Yeah. Exactly.
It's
Yeah.
a dangerous game to play, and I think there are other things that are more certain.
Hmm.
You know,
Okay.
right now, I'd
Yeah.
say Bitcoin is for cowboys. Okay, you
Yeah.
may do well, but you may get killed.
Yeah. And with Forex, what pairs do you tend to work with on a day-to-day basis? Is it the dollar mainly,
I'm
or
focused on the majors. Okay, I like,
yeah,
you know, let's say pound USD is my favorite. Australian dollar, US dollar is another favorite. New Zealand dollar, US dollar. US dollar, Canadian dollar is another big favorite. And some of the other pairs that go with the pound, like pound yen or pound Australian dollar or pound New Zealand dollar, they're good movers during the day, and you can get a lot of action. Whereas Euro USD might sit sideways for quite a while.
and Jeff, what's your day-to-day schedule like? I mean, are you up early trading and finishing quite late, or is it a select few hours every day? How do you schedule your day?
I've changed quite a bit. Okay, I used to get up, um, which would be about 2 a.m. Chicago time, and trade London, which was open at about that time.
Yeah.
I've since kind of stopped the London session. That I don't really need it to make money consistently. That I seem to do my best trading from about 6, 7 in the morning Chicago time till 1 or 2 in the afternoon Chicago time, which in terms of the UK, that would be like noon till 7. I get my most action when both the US and European banks are open. The US banks are not open at 1:30 in the morning here, okay?
No. Yeah.
So they might come in at 6, 7, 8 here in the morning sometime. And of course, London is still open. So you got all the banks open. And that's where I see the best moves from, uh, say, UK time, noon to 7. So that's where I do most of my day trading.
Okay. Yeah, and of course you teach as well, don't you? So is that one to one,
Yes,
or
strictly one to
yeah,
one. I teach on Skype and work with students usually twice a week for an hour and a half each. And then
yeah,
we trade together in a demo account, what trading what they've learned. And when they show consistent profits in the demo account, we move to real money. And that's generally a 2 to 3 month process. What I do is a little different. I'm much more like a tennis or golf coach than anything else, because I work closely with my students, and those that take my course for 2 or 3 months, I consult with them for the rest of their career at no charge. I talk to them for the rest of their career to, discuss specific trades, exchange charts, and I'm always available to them. So I suppose it makes me a little different as a coach.
and how much do you charge for your training program?
The the 3 month course is 4,900,
Yeah.
and the really good news is that I include with that $100,000 free funded account.
Mm, very good.
Yeah, so they have to go through an evaluation before they can start to use the 100K. Usually, after the course, they go through an evaluation where they have to show that they can trade, okay, that they can make money.
Yeah.
And
Yeah.
then I give them the $100,000 real account and turn them loose.
Ah, cool. And then they just come back to you every now and then for
Oh,
guidance,
they
kind of thing.
call me all hours of the day, anytime, nights, days, weekends, and I'm just there to answer questions or discuss a trade that they're thinking of or helping them with whatever other kind of problem they might have. So um,
Yeah,
I just
yeah,
believe that coaching, is a personal thing. You can't give someone some rules and turn them loose. You really need to work with them. I mean, like a golfer or a tennis player, they go bad from time to time. So they need a coach to go to. They can't solve their problem in a class or a seminar, etc.
yeah. I mean, it needs to be individual, doesn't it? You're talking to a person, not a programming a robot.
Absolutely,
Yeah,
absolutely. So my coaching is all personal, all one-on-one. If you look at the great traders over the past 100 years, they all had a mentor.
yeah. Who
These
was your
guys,
mentor?
like George Soros, okay, I think he's taught at least 10 or 15 people who went on to become great traders, okay?
Makes
Um,
sense. Yeah, yeah.
so, having a mentor is really key. When I went to the Board of Trade, when I first started, I was lucky to have a mentor, a guy who had been trading corn for 50 years. And, I was fortunate to know someone like that who could, guide me in the early days. I remember like I said, he'd been trading corn for 60 years. I went into his office one day and I said, this was very early before I knew much. I said, what do you really do here? I said, you've survived 60 years. How'd you do it? He said, I buy dips and sell rallies.
Yeah, makes it sound deceptively simple, doesn't it?
That's how we survived 60 years. I mean, how simple can you get? I buy dips and sell rallies.
Yeah, yeah.
So I never forgot that.
Right. Yeah, that's a good one. Yeah. And do you go through periods even now where you sort of feel a bit stressed by what you're doing, the trading? I mean, you mentioned just earlier the US dollar spiking upwards when you've taken a short position, but are there other sort of cases where you've sort of gone through a bit of a rough patch? And what do you do about
Well, I think that, very often I look forward to the weekend, okay, to
it? Yeah, just chill out. Yeah.
yeah, and just clear my head. I think what I do to answer your question is if things are going hard or have been over a certain period of time, I just step aside and get away from it. Let my head clear. Uh, close my positions and just stop for a couple of days and let your head clear, get rid of all the negative thoughts, and then start thinking about what you did wrong, and then go back in. So I think if your head is bad, and if your trading is going bad and your head is not good, just stop for a while, and you'll figure it out. Okay, because the worst thing is to try and trade. If you have a bunch of losers and they're eating you up, it's very hard to make another new trade
Yeah.
because you're not thinking right. So it's best to just get out of everything, go to the sidelines, relax, and then start think about what you did wrong, and then go back in. When you come back in, trade very small, okay, to build up your confidence, and then once your confidence is good, then you can start doing bigger size again. Confidence is so important. If you
Yeah.
don't go to work every day knowing that you know how to do this, okay, and that you can make money, it's very hard to succeed without confidence.
Yeah.
But that's in everything, right? Baseball, football, tennis. You really need to be confident. So I spend a lot of time keeping myself confident.
Yeah. Yeah. And what do you think keeps you going with the trading? I mean, because obviously you've done very well. It's not like you kind of need the money per se. What is it that fascinates you? What is the passion there? Are you able to articulate that?
I just think it's the challenge. I mean,
Yeah.
you're trading against the best in the world, some really smart people who are smarter than you are. Okay.
Yeah.
I know there are a lot of people a lot smarter than me, so there's a big challenge uh, to try and compete with them. It's a challenge that gets me going. Okay, but aside from that, there's a great sense of reward when I teach people and they do well. That's very satisfying. To take someone who's struggling, just either losing money or just staying barely above water, and turn their career around so they make money, that's tremendously satisfying. One of the things I do, I have a group, a chat room group that's free. And there are about 500 people in there from all over the world, a lot from, poorer countries, I would say, in Africa and Pakistan or Afghanistan. And it's a free group, and I provide them with educational things, tell them what books to read and things that show them charts and whatever. And it's totally free, and it's kind of nice because a lot of these people have no money, so gives them like a chance to learn. So I get a lot of satisfaction from that, and like I said, from seeing my students do well. I've been telling you my mantra is see it, do it, don't think about it.
There we go. I think we should end on that note. Okay. Thanks so much, Jeff, for being on the show.
Okay. Have a good week.
Yeah, you too, Jeff.
Okay, bye.
Jeff Wecker. Just before you go, if you're a regular here and enjoy the podcast, please subscribe. Then check out my Patreon page at patreon.com/penrakes podcast. Thanks very much.